Thanks for taking a couple of minutes today to watch this short video on a subject we think could be very important to your retirement income. Our show today is part of our continuing pre-recorded series that we're calling Air Conditioning Side Chats because we live here in Florida. What are two of the biggest fears you have as an investor? First of all, you most likely have the fear of missing out. You might fear missing out on extra income while you're in your retirement years, or maybe even missing the next big move up in the stock market. We know you want to see higher returns while earning more in your accounts. For many of you, the high inflation that we're experiencing is causing you to reevaluate your investment strategy, and we're here to help you with that. I think your grandkids call this worry FOMO, which stands for fear of missing out. It's really just human nature with a financial twist. The symptoms of FOMO can be amplified when you have an excessive amount of cash sitting on the sidelines, earning next to nothing. But there's more to that. There's more to this FOMO dilemma than just that. Your spending power on your cash that we all have in the bank is being directly affected by inflation. We all need to have cash in the bank. But when you realize that, roughly speaking, with an 8% inflation rate, if you multiply it by that proverbial $100,000 worth of savings, then next year at that clip, the 100 would only be worth somewhere around 92 in terms of spending. So the value or spending power of the 100,000 now only buys $92,000 worth of goods and services next year. Now I know all of you pretty well. As a younger man, I used to say your generation. But I think it's time for me to say our generation hates wasting money. We clip coupons, we go to dinner early, we give money to charity. There's a million other things we do to save a buck. But what makes us really sick inside is wasting money. Now, would anybody listening to this video today purposely throw away $4,000 or $5,000 a year for 13 consecutive years? Anybody? Anybody you know? Sure, the answer is a resounding no. However, it's a fact. What we've all done or are still doing is exactly that. If we did have that $100,000 in cash sitting in a bank account, earning nothing these last 13 to 14 years. Again, we all need to have cash in the bank. But in these inflationary times, I think it's worth reevaluating your cash needs and your investment strategy. With the current inflation we're all experiencing, the loss of spending power and increasing monthly expenses are making us all take a second look at our portfolios. Now, the flip side of this FOMO, or fear of missing out, or fear of losing money on your investments, that's very critical to you. And as we've witnessed so far this year, this is happening in almost everyone's account. Now, while your income likely is the same, the value of your account in some cases has fallen back to 2020 levels. And we know from history, especially recent history, that unless we panic and sell out, those paper losses might not remain permanent. We'll have a deeper discussion on the volatility of the stock market on another video, but we all must do is look back to very recent history. Go back to 2008, 2009, when our market values were cut approximately in half. Or even go back to March 2020, the beginning of COVID, when our market values were cut by 40%. Yet, in remarkably small amounts of time, in both of those terrible instances of market volatility, the value of our investments came back. But I digress. Let's go back to the question, the fear of losing money. Many of you will say, Mark, I want to invest. I know I've got too much money in the bank, and they aren't paying me anything. Time and time again, I hear clients admit that they know they're earning zero at the bank, but they're too nervous to put the money to work. That's a valid concern and at the same time a really good question. This could and does happen. There's no doubt about it. What if I could show you, though, an investment that would pay you up to 20 times more than you're earning in the bank on your 1/10 of 1% on the money market balance? There is more risk, as you would not be in an FDIC insured bank account, but it might be worth a look considering your risk tolerance. This investment would pay you the income as long as you live, and if you're holding it when you passed away, your beneficiaries would receive the full principal back, even if the value had fallen during your lifetime. Let's repeat that. Your spouse or your children, with the proper paperwork that we would provide, would receive the full principal back on this investment if you passed away. I think some of you already have figured out what we're talking about. These are certain corporate bonds with very big names like Verizon, Goldman Sachs, Bank of America, Prudential Insurance, GE Capital, Dow Chemical, that issue a type of bonds with what is known as a death put option or survivor's option. You see this type of bond on our inventory sheets as DPO bonds. These bonds were designed for older investors who want to earn something in their lifetime, knowing that should they pass away and the value of those bonds are less than the face amount, that they know with some paperwork and about 3 months worth of waiting time, your relatives will receive the full principal. The full principal will be returned to your family. Let's give you an example. Let's use a small amount of money. Let's say, what if you bought a $10,000, 4.5% Bank of America bond that matures in 20 years? Now, I know you're not going to be around in 20 years. I may not be around in 20 years. But remember, to simplify things, with a death put option bond, one could say your bond more or less matures at your passing. And it could be called in early as well at the full principal. So you're going to earn $450 a year on that $10,000 bond every year that you and your spouse hold it. Now, if you compare that to what you're earning at the bank, if you're lucky, you might be earning $10 or $20 a year. Could be more, could be less, depending upon what rate your bank is paying you. Now, of course, you can't compare FDIC insured deposits, apples, to the apples of a bond. But I think you get the picture. You must decide whether or not you're willing to take on the risk to earn the higher return in the market with bonds on big companies you've known all your life, knowing the full principal will come back. Further example. So now, 5 years down the road, God forbid, something happens in the family, somebody passes away, and maybe interest rates are higher. Let's be really negative and assume that in 5 years, interest rates are much higher. And that $10,000 bond that you've been earning $450 a year on every year is now worth around $8,000. Well, hypothetically, we would ask your spouse or children to please fill out the paperwork that we would provide from the issuer. Then, depending upon when the bond pays, in this case, Bank of America, would pay your beneficiaries the full $10,000 of principal. So if you would like to explore whether these bonds are a decent fit for part of your portfolio and how these bonds might help you earn some decent income in your retirement years, especially during inflation, please call us for details. You don't have to earn near zero on your savings. Given the high inflation that's affecting all of our lives, it might be worth looking at some different investments, such as death put option bonds, that might be a good fit for part of your income portfolio while giving you some principal protection in the end. Give us a call today, 1-800-868-6864. That's 1-800-868-6864.